Good evening, ladies and gentlemen. Thank you for showing up tonight for the free market update webinar, which is going to be very, very important for the coming weeks. And looking at the markets and some of the events that are going to be taking place, major events. Uh, this free market update webinar is available for viewing by all members, and for anybody out there who's not even a Clueless 8 member. I'd like to always remind everyone that they should pass on the word that if there are people who are interested in the market, whether it be trading or investing, want to understand the real story of what the U.S. financial markets do, not the fake stuff that's disseminated on the media. Not that all is fake, but a lot of the times explanations that CNBC and specifically CNBC, not as much Bloomberg, but CNBC is putting out there is so watered down that they have no idea what they're doing. All they're doing is reading a script. So if you want to understand some of the real facts of and the reasons behind what the markets do, what markets will do, then these free market webinars are invaluable money-making tools. So please pass on the word that Clueless 8 Trading on YouTube is available whenever the free videos are posted there. So full disclosure, this is purely for financial education, not for any solicitation or advice. Tonight is losing track of time here. Sunday, March 18th, 2018, approximately 8:47 p.m. And let us start. As I always do, and I try to keep it as concise as possible and to the point, a couple of broad points in the market. The most important and critical event that is going to happen this coming week in a couple of days is the Federal Reserve meeting with our great new Federal Reserve chairman nominated by President Donald Trump, great person, Jerome Powell. And Mr. Powell is, Chairman Powell is going to be presenting, overseeing the first Federal Reserve meeting and will subsequently be raising rates. There is a 80 to 90% probability factored into the Fed fund futures that there will be a rate hike, which is normal. It should be approximately probably quarter of a percentage point on the federal funds rate, possibly the discount rate. We shall see. So key is interest rates are already being factored into the market, that they're going higher, and that will happen this Wednesday. The new Fed chairman, Mr. Powell, Jerome Powell, is going to be also conducting a press conference, which happens at 2:30 p.m. 2 p.m. the communique comes out with the announcement, and then 2:30 p.m. He'll be answering questions. He is Mr. Jerome Powell is an old hand at the Federal Reserve, and he knows exactly what he's doing, and I'm sure he's going to do a tremendous job. So very comfortable with his abilities to handle the monetary part of our U.S. economy, which is the U.S. Federal Reserve Bank. So that's number one. Number two, as always, by the way, what you're seeing behind you, which we're going to go through, pretty easy to understand. We're stuck in a tight range in the market, and this is the S&P E-mini futures that are trading actively right now. So you're going to see a little blip here, up and down. We're down roughly about 3 points. Nothing to write home about. Normal procedure on a Sunday evening at 6 p.m. when Globex futures start trading. Foreign markets are going to start opening in the next couple of hours, and some have already opened. And futures are indicating a flat to slightly higher open, up and down a little bit. Nothing crazy. There's no major turbulence in Asian markets, which Australian markets and Asian markets that are opening, and of course European markets will open approximately 4 or 5 a.m. Eastern Standard Time. With the time change, I think it's 5 a.m. right now. I'm not quite sure, but anyway, so that's there. So you're seeing that live motion of money moving. Futures down about 350, so you're going to see this moving up and down, back and forth. Anyway, second point, really, really important. There's a lot of political drama that's being played out in D.C., and that's already factored into the markets, to be honest with you. We're not, let's put it this way, and I was joking around with my good friend here, Golf, about, not being an ideological trader. Generally speaking, markets are swayed by politics, but after it's a law of diminishing returns. What it basically means is that the market's already factored in that there's going to be political drama with the Mueller investigation, the back and forth, which is normal, from President Trump defending his position, the weekend tweets and all that stuff. So that's there. So as traders who are looking at the markets in a very technical, unbiased viewpoint, regardless of our political beliefs and all that stuff, the point is that we have to focus on the technicals. I've always said that. I always keep on saying that. And I've been saying that for years. And now it is really a purely technical market. I said that in 2017. And I did not mean it to, in jest, but I meant it very seriously, that 2018 is going to be the year of the tactical trader and the demise of the emotional trader. We are all, and that is, you're seeing that happen every single day. The markets are trading within exact specific levels that I'm showing. Volatility is tough to handle. That's the nature of volatility. Volatility means turbulence, right? So turbulence is tough to handle. But the only way that you can manage your trades, stick in the swing trades, do some fast intraday trades, make some good money on the SPX calls or puts, things like that, is through looking at the charts. So this is the year of where the transformation of the emotional trader to a tactical trader, with emotions that are always going to be there. I know that's obvious. Is not just mandatory. I mean, that's the rule. Going back to so the second point is the political drama that's going to be back and forth, and the markets are going to be volatile in between that. But generally speaking, it's a law of diminishing returns, which simply means the more that happens, the lesser a consequence you're going to get. Okay, so it's just simple things in economics we learned in college, right? The more you have a causal effect, it will have a lesser consequence or result going forward. So you're going to see markets reacting hopefully less and less to these dramatic tweets, the back and forth with the movements out of the political system that's happening in Washington D.C. All right, so that's it. Point number 3 is going to be your business stuff. Okay, now that's really critical stuff. My belief has always been, and has still is, that regardless of all the tough talk and sometimes the dramatic tough talk out of the Trump administration, the fact is that they are practical. The business people, there are great people who are running it. Larry Kudlow is a terrific economist from the Wall Street end. And if you want to know about Larry's history, he went through a serious upheaval in his life. And I'll leave it to you to Google it and find out. But Larry was basically almost a dead man. Okay, back in the 80s, he was heavily addicted to drugs. He was, I forget the firm that he was in at that time, and he basically was in the Hall of Shame. Okay, and he came back. Now, why is this person going in the trading room? This is Nick's friend Mark asking me if there's a webinar on tonight. So let me just type it back to him. Webinar link in public chat room. Please click. Okay. Okay, so Larry Kudlow is there now, the head of the Economic Council. So that's good. And then you have Peter Navarro, who is the hawk, and he's always been. Anyone who knows a bit about financial history, Peter Navarro has always been a hardcore hawk when it comes to China specifically, and there's nothing new on his views. Okay, so the trade stuff is serious stuff. I hope that we manage to have tough negotiations to rectify some of the wrongs, as in specifically on certain areas where the U.S. We feel that we are unfairly targeted with tariffs, bigger open markets for our companies overseas, and stuff like that. We cannot get into an ideological war with our trade partners, because the fact is the world is completely interconnected. All right, guys. So whether we like it or not, the fact is that it will have huge ramifications, and that's why the last headline. Um, by the way, as I switch screens, I'm going to switch screens so you can stop getting bored of looking at the same screen. I'm going to go through all these charts. This is a wider angle chart of the S&P 500 futures, as you can see, where we started this recent journey on in beginning of March. Time moves fast, right? And here we are on mid March, and this is where we are. Okay, so anyway, so that's something. Those headlines coming out are going to rock the markets, causing volatility. There's nothing we can do about it. That's just the way it is. I do believe the end result is going to be there is never an amicable resolution. Okay, you guys are all grown adults. We're all grown adults, hopefully. So we know one thing in life: there is never an amicable solution between two opposing factions. There is always a compromise and an agreement, whether it be in our marital lives, whether it be in business. It is always the same. So if somebody's looking for, like, oh, everyone's going to be really happy with the trade negotiation stuff, no. Okay, there's going to be disappointments. There is going to be hard-fought negotiations, and no one party is going to get everything they want. Now, we have a lot of leverage. We are the world's largest marketplace. We have the largest 80% of our GDP, or domestic gross domestic product, is consumer spending. We are avid spenders. That's what Americans are. Even when they have 2 cents in their pocket, they're spending. Okay, that's just the way it is. You're not going to change it. That's the basis of our economy. You spend and then you pay back, and on the credit and all that stuff. That's the way our system is set up. And no one's going to ever change that, regardless of how much they scream and shout. And if they do change that, then the U.S. economy is going to go into a deep depression. I'll tell you that. Okay, the U.S. economy is run on credit and leverage. And that is always going to be the case. All right. It's never going to be like, okay, I have $10 in my pocket, I'm going to spend $10 out there. No. If you have $10 in your pocket, you're going to spend 40. The other 30 you're going to use from your credit and your leverage that you have, and you're going to pay that back. And that simply means that the economy has to keep growing. So the policies that have been put in place by the Trump administration should spur growth. Economic GDP numbers have been coming out strong. So that means that companies and individuals will be able to service their debt, which is fine. Deficits are fine. And that's what Larry Kudlow just said. All right. And Trump himself said, we can carry deficits as long as the economy is growing, and we can basically service our debt. So anyway, so the third and most important thing is the trade negotiations and all that stuff back and forth. That's going to be moving the markets back and forth. Risk number 4 that could roil the markets is some sort of extraneous event that we are not fully aware of right now. Okay, and that could come from an overseas situation. That could come domestically, but domestically we know a lot of stuff. What's going on? Our banks are well capitalized. Our interest rates are held in check. We did have a massive black swan event, which was when the hedge funds all blew up on the short volatility trade. When volatility VIX spiked, they lost billions and billions of dollars, creating massive havoc. This is the daily chart of the S&P 500. Okay, see how different they look from each angle that you're looking at. Angle meaning whether it's a wide angle or whether it's what do you call zooming in. So things look different. This is a wide angle view, looking back at it, from a daily chart. Anyway, going back to my topic, very, very important, all of you should realize, is the fact that if there is, let's say, for example, some sort of shadow banking crisis, things like that that suddenly pops out of China. We know it's there. We know that the Chinese government is working hard to deleverage a lot of their shadow banking. Shadow banking simply means that a significant amount of their business borrowing and stuff, especially for small businesses and merchants and stuff, are coming from non-bank sources. So that's called shadow banking. Just like in any other city, any other big city, there are lenders who are not affiliated with banks and such. And obviously, they carry a risk because they're not regulated. They're not regulated. So that's one risk. The fifth thing that I can think about is all of a sudden one of the fifth thing is basically political uncertainty, global global crisis, North Korea, Iran, things like that. What if Saudi Arabia goes full blast against Iran, which they hate Iran, right? Saudi Arabia was one of the reasons they're very very affiliated with the United States government and specifically the Trump administration. And the Saudi king is very much in line with President Trump's views that the Iran nuclear deal should be scrapped in May. So, and they were behind it when Trump said that, hey, we're going to basically scrap the deal. So that might cause some severe ramifications in the Middle East. What if Saudis and Iranians go into a full-fledged war? We're going to side with the Saudis, but Iran could shut off the Strait of Hormuz, which is a small. It's like a little canal. It's a little wider than a canal. It's wider than the Panama Canal, obviously. But the Strait of Hormuz carries 90% of the world's oil. Imagine what's going to happen. Okay? So those type of extraneous black swan events, we don't know. What we can monitor is corporate earnings. We have to watch out as we go into the next couple of weeks. We have to watch out what companies are, whether anybody's pre-announcing. Now that's what comes into that. It directly affects our trading. So if a large company is pre-announcing that they're going to have a shortfall based on this or that, you can rest assured the markets will react immediately, and that whole sector in the market will react negatively. So earnings pre-announcements are critical. Okay. Earnings pre-announcement, this is where we are right now. As we were speaking in the past 20 minutes or so, futures are down about 6 3/4, 6.75. You can see that right there, all within these structured levels. That's how it operates. So that's the global futures. Futures E-minis are right now down 6.5 points. So right there. So anyway, so the earnings pre-announcements are critical. We're going to start to get starting in early mid-April, we're going to start to get earnings for the first quarter. One of the first notifications I got was Netflix on the day after tax day, April 16th. They're always the first ones on the tech side to report. So we got to be very, we got to monitor that stuff. So that's it. All right. So that's a broader picture. The second thing that I wanted to just quickly, gloss over, and I talk about it all the time, and which is a critical part of my trading and modeling my trading structures and my thought process in the market is trader and investor sentiment. Okay, trader and investor sentiment, because of this huge amount of volatility. Yes, it's structured volatility. Yes, we know. But look, while we're speaking, futures are down like 8 1/4 points. Now, this was happening in the middle of the day, which it happens every day. Volatility creates fear in a very large way. I talk about it a lot. I post it, and I mean it. And it causes uncertainty. That's the nature of volatility. And it pushes even the smartest of traders, to the sidelines, or pushes them to do stupid things emotionally, because after all, it's real money involved, and then they regret it. Now, this has happened to all of us, and for some of you, it has happened all the time. In other words, you're missing a significant amount of tactical reflex bounces, which can deliver some very solid results. We have seen that happen over and over again. Or you are just not doing what you should be doing on a bunch of swing trades because of the volatility that scared the living daylights out of you. And you could have, made some decent money, made some really decent money. But the nature of volatility, regardless of, you hear a lot of these guys on TV sometimes, they work for the big firms, the Wall Street banks. They say, hey, volatility is really good. Hey, that's complete hogwash. Volatility is great for investment banks and trading houses because they make money of people panicking, selling, buying and selling at the wrong time. That's what emotional traders do, right? So for them, volatility is great. So vol, as they call it, is a big revenue producer. So they say volatility is really good. And they also keep on propagating one of the biggest lies ever propagated in the market, which you've heard me say, which is that there has been no volatility for the past year. What the heck are they talking about? Okay? There has been severe volatility. Yes, not as severe as we're seeing nowadays over a very short period of time in the marketplace forever. And now the volatility is obviously, what we went through back in beginning of February, right? These are massive volatility moves, right? That are happening. This is a daily chart, so each candle is a daily candle. Yes, the volatility is severely enhanced. But if you go back to, let's say, and I've talked about this repeatedly, so I'm not going to harp on this too much. Let's say we go back to, this is going back to 2009. Okay, going back to 2009, bottom of the market, 666. Okay, these are all heavy volatility. Now the volatility is enhanced because the numbers are bigger. Here it was 666, now it's 2800. So obviously the point drops are going to be bigger, back and forth. But there has always been volatility. Okay, there's either micro volatility or there's been big. These are big drops in the market on a percentage basis because the numbers were smaller. But look at that. You can see, and I'm kind of like highlighting that, there's been tremendous volatility and then the big move up. The only time that I did not see any major volatility, even though intraday there was some, was that big ramp up between January 1st and beginning of January to January 29th. And even on then, everybody was absolutely, excuse my French, shit scared because they couldn't believe the markets were rising like that, right? So the key point is the biggest lie that has been propagated by the media and by the big firms is that there's no volatility. There always been volatility, guys, and you guys know that. There's either volatility intraday or volatility intra-week or volatility, intra-month. And then as you look at the picture, it's been a rising trend. And there's simple way that what I'm saying is absolutely correct, and why they are propagating such a huge lie, saying that volatility is a good thing and there's been no volatility. Everyone was complacent. Nobody was complacent, because let me ask you a question, and this is the simplest way I look at the markets. Okay, and I think you guys will all agree with me. If there was no volatility, then why didn't we all make millions of dollars in 1 year? We just sat there and said, "Oh, we know that things are just going to go higher and higher." Garbage. Why didn't the small trader make $10,000 a week and the big trader make $100,000 a week if there was no volatility? So my job at Clueless Day Trading is to bust out and blast out these myths that are propagated. And you know exactly what I'm saying. You know exactly what I'm saying. So now the volatility is very enhanced. And that's just part of life. So on that note, guys, let me dive into the charts, because without the charts, there is no salvation. All right, that's it. I need to remind you guys that. So this is what's going on, and the more you track my charts, replicate them on your side, track your charts, draw a couple of lines, the more you can contain your fear. And I know this fear. I know the change in mood of my members, okay? I know the change in mood that's happening across the board outside Clueless Day Trading. Everybody's dead scared, which is fine, which is a sign that there is no euphoria. That means less money is going into the markets overall from the active trading side, which means the markets have room to move higher. When all of you get too giddy, you know what happens. All right? If I hear 9 kabooms in one day, I know, by looking at my charts, that the markets have short-term peaked. When I hear absolutely none in 10 days, as I have not, even though we have a huge, powerful movers and winners, selective winners, and not even one single member said, yes, I did it, kaboom. Guess what? That's a good sign. That's a good sign. All right. So fear, like I always say, should be a positive stress motivator, not a negative one. Easy to say, hard to do in life and in trading, but we can all deal with it. So let's get straight into the charts, guys. All right. Because we're all in the same boat. So here's where we are. And this is the range the market is trading in right now. Futures are down about 8.5 points. Oh, there was another very positive development that happened. E. Gang, the gentleman who was nominated for the PBOC, the People's Bank of China, that's the Federal Reserve governor, replacing the previous gentleman, Zhu, is a Harvard-educated economist, American-trained economist. What more do we want? We want American values overseas? You got it. The head of the People's Bank of China is a Harvard-trained economist, well-versed in the American financial markets and everything. So he's going to be a great communicator. And talk to him. So that's a very big positive, in my opinion. And so are the world, you see a lot of big shots saying the same thing. Okay. So that just happened over the weekend. So basically, looking at the charts, pretty self-explanatory. We are in a trading range, and that trading range is around 27.67 on the upper end. On the lower end, it's around 27.44. So going back to our old method, that's about 23 points. Let's call it 24 points. Let's call it 23 points. So we are basically moving between 138 point band. Oops. Sorry. We're moving 138 point plus minus on the Dow Jones Industrial Average. Once you understand these charts, which are not difficult to understand, and I write short comments and explanations when I put them out on the real-time Twitter feed, so you can it's an ongoing education during the day. Not just trade alerts and a couple of charts with no explanations. All of them have some quick explanations on it. So bottom line is that you understand that, then you don't get freaked out as much. So 138 points is where we are basically trading in right now. Okay? We have a lower level here. We'll look at the wider chart to determine what those lower levels are. But this is really what the market's been doing since the 14th. Since 14th, which was Wednesday. Since Wednesday, the market's been in a very tight range of 138 points back and forth. Now, somebody who's not looking at charts whatsoever, they will be looking at the market dropping, let's say, 50, 60 points, go, oh my God, here it goes, it's the end of the world. But somebody looking at the charts will know what is going on. And then they will also know how to react in between all my real-time alerts on the short side and the long side. SPX puts we play quite often, SPX calls and such we do too, you know that, or SPYs or IWM, is if it breaks a certain level, you gotta react, you gotta do it, you gotta go short. You gotta be very quick because these things move very, very quickly. By the time this session ends, we could bounce up. It's happened many times. We could bounce up. Futures could be up like 7 points. If something else comes out of there. But now markets are opening, so they're taking the cue from Friday's close on all the selling and stuff that happened. And so they are, they're kind of reacting to it. So, all right. So that's it. So watch this chart very carefully when I post it, because this is telling you on a short-term basis what is going on. Now, as we are speaking, now this was the, anytime you're looking at a technical chart or technical analysis, you always look at the last reference point. So the last reference points in this picture is the 2800 level. Now, all of you remember the 2800 level was the big reflex bounce that we had, and I called it to the teeth. I said the most we can get to is around 2790, 2800. It's exactly what the market stopped. In fact, they went up higher than 2800 slightly before they started falling. Okay, so that was the big reflex bounce, which we'll look on the SPX. That was after the first humongous 1300 and 12% loss on the Dow Jones Industrial Average, and the big multi-day reflex bounce that most people missed. All right, so that is the last reference point for this stage of our trading journey. The reflex bounce and up to 2800, and this is where we are. So these charts are very simple. Anyone can construct it. All you simply do is you draw a couple of lines based on the reversal points up and down. Supply points where the big sellers come in, and demand points where the big buyers come in. All right. And once it reaches here at 2744, either it's going to slice through, but most probably it's going to create these small green candles, and then they're going to see what they want to do. Futures are down about 9.5 points right now. So that's your 9.5 points right there, all moving within this band. So I put arrows and stuff just to get people a little bit more guided, more focused. And the market basically right now is fighting back and forth at the 50-day moving average. That's why we called it the 50-day SMA volatility cluster. There you go. All right. So this is your most important chart during the day that you need to track. In order for, not because you're a futures trader, it's because that'll help you determine whether you should be going nuts on a position, which I wouldn't recommend anybody to go nuts on any position now till we reach some sort of tactical major tradable low. But at least you'll know what to do and not panic. Okay, let's move on to the next one. The next one is a broader picture, right? So here we crashed and burned big time, right? All the way from the 2800 level. This was back at the end of last month, February 27th, and back and forth, lots of volatility. You know, let's say if somebody was shorting here, they'd be blasted out because there was a nice 60-point move on the Dow within like a couple of minutes. That's the nature of volatility. You can see that. Lots of volatility reached here, and then we busted a move. In between, huge volatility. Now, one of the simplest things I always say, that if you're not, and this is your just simple stochastics, you can follow, any kid can follow it. When you get oversold, you should expect a bounce. That's generally the case. And when you get overbought up at these levels, you should expect a reset, or overbought, oversold, right? That's how things work. And overbought conditions generate people who bought it in oversold conditions, like we mostly do, is where people are taking profits. As they take profits, you get oversold. It's really not that hard to understand. You know, it's all about liquidity going in and out of the markets, right? So that's it. So look at these intense volatility moves. Not easy to chart, not easy to be honest with you. You know, forecasting markets in these extremely volatile conditions is almost a dauntless task, but I do it. That's my job. And overall, I'm pretty good at predicting it, at least showing you guys some very relevant points where the markets can have a severe bounce or where they will sell off. Can't getting too excited because you're up 400 points on a day. Okay, but this is what brings me to my most important point, that if you're not set up on your trades at these type of levels, let's say, and we have shown this repeatedly, then you will totally miss out those days, which are those 200, 300, 400 point type of days. This was a 400 point day 2 Fridays ago on the jobs data, right? 440 points. So you totally missed out on that. Most people did, I know that. Because you can chase it during the day because these are high momentum moves. But if you're not set up a little bit earlier with nothing crazy, with something, you know, especially if you're a tactical trader, then you will totally miss out on these moves that come along from literally nowhere. It's not like they raise a green flag and say, I'm going to be up 300 points the next day. So that's what I always make a very important point on, and I hope some of you are finally getting it, is that if you don't buy those tactical measured dips and you get excited buying at the upper end of the scale, and we call these days shooting fish in the barrel, right? Because you're situated at these levels on a day that the market's been volatile or lower, and we are basically scooping up things And one of my terms is, if we're going to get these big sell-offs, many of you know that well, that over the next 24 to 48 hours, because I've seen it happen almost every single time, there will be a large reflex bounce. And if you're not situated at those levels, you never make that money. And then you get in there because you're starting to feel good, and you start to get in there, and boom, the market basically dips. So what's the little voice in your head go? The little voice in your head goes, man, every time I get in the market drops. Or every time I buy the market, it doesn't go higher. Well, that's your emotional part of your brain speaking, which has really nothing to do with your trading expertise. You're a lot smarter than that. But if you keep on listening to that voice, because you did the stupid thing by not buying the tactical, say for example, even now, the tactical dips at these deep oversold conditions. Now remember, these are the fast stochastics, the 14.3. So these are showing you what happens within the day or within a day or two. We're going to look at a longer term chart too. But anyway, so when you're not buying these, when you're not setting yourself up earlier by having a small position, by cost averaging down, if you get a minor dip, let's say you set yourself up here. This is not the first time I'm explaining this stuff. Okay, it ran up, you didn't sell it, and then it pulled back. It's still within the channel. That's the reason why I draw these charts to perfection. My charts are really drawn well, guys. I'll tell you that. All right? How you trade them and stuff, it's your business. But my charts are really drawn to precise levels. And somebody said, well, how do you do that? Well, it's not that how do I do that? I've said it a zillion times. First of all, practice gets somebody better. I don't like the word practice makes perfect, because I never want to be perfect. The day you become perfect is the day you die, is because that means you have nothing better to improve on in your life. Life must get pretty boring. You always have to be hungry and always wanting to improve something about yourself. So practice makes perfect is kind of a dumb term to me. Practice makes you better, wanting to do better and better. So the bottom line is that the reason why these charts are drawn well, because the markets are very algorithmic and mathematical. So the lines match, and I try to do all that, and then I look at the patterns, and then part of it is gut intuition, and part of it is luck. That's it, But like they say, prepared mind is the best chance of success. Will have the best chance of success than just somebody just throwing darts at the wall. It's not a darts in the wall type of game, all right? So saying all that, if you bought, let's say for example here, and then it pulled back, it's still within this great uptrending channel, then you bought a little bit more here, even though you bought here. So you basically cost averaged, right? It's still within the channel. You waited around, and this is all happening within a day, right? Days. Then you had some. You maybe took a little bit of profit here, left a little bit in there. The jobs data was a very critical number, very critical. The reason why the markets reacted like that, number one, is because the jobs data was like a Goldilocks situation. It was perfect. It was strong jobs growth with low wage inflation and very minor rise in wages. I said that many weeks ago, if you remember, when the markets had a complete meltdown because they said wages were going nuts. Remember that? Okay, back in February 1st, all of a sudden it was like, whoa, 5% increase in wages. I said, dude, relax. What, the factory workers going to be driving a Ferrari soon? I mean, come on. Yes, it's good that wages are going higher. We don't have runaway wage inflation. It ain't happening. It ain't happening. It happens on the higher rungs of American society. I'm not talking about higher rungs like, aristocrats and stuff. I'm talking the brainy class. Try to get a job as an Amazon engineer. There's wage inflation there. They're competing with each other to get 600,000 plus signing bonuses. All right? Because education and your brains is your ATM machine. So bottom line is that's wage inflation out there. They can't find enough smart guys to work on those industries. All right? There's no wage inflation on the steel industry. Yeah, a steel worker will get a little bit more. So what? Okay? So don't expect them to say, oh, we're just going to get a 50% hike in wages. That doesn't work like that. It's not the same world anymore. So I did say that this is not a wasting, and I was dead right. So then they saw that and this month's number, and boom, it went nuts. The second technical reason is because a significant, I think, a good number of these hedge funds, the so-called smart dumb money, and of course a bunch of retail traders, but we don't really have that much of an effect in the market. It's the institutional hedge fund guys. They were short. They were short before those numbers, thinking, oh, yeah, the wage numbers are going to be higher and the markets are going to, from this point, then they're going to basically do this. Well, no, they didn't. All right. So the massive short squeeze propagated a 400 plus point rally. And it was huge. So if you're set up at these levels, you're just selling at will. Now, here's the interesting part why his sentiment is zero in Fourier part. On the day, on that Friday, there was not a single member in the room, which is fine with me, guys. You know, I love you guys. You know, thank you for all your support, for making Clueless 8 trading great again. It's always been great, but great. But there is absolutely no joy because none of you really made money that day. I speak the truth. Okay? And this is happening across the board. Now, if you can't, it's a horrific event because the pain of sacrifice is far less than the pain of regret. Could have a little bit, and the little got big, position-wise, because it was huge. And I'm not the type of guy to sit here and point at every single stock that went up, or the SPX, how they went up 200-300%. You can see all that stuff directly on my Twitter board. On my Twitter feed. So that's why I'm saying that the overall sentiment is absolutely horrifically dismal, apathetic, despair, which is good. So the more dismal and crappy you guys feel, the better off for the markets it is. And for yourself going forward. Trust me, what I'm saying, you know it. So stop being in denial. Okay. Now, so at this point, let's look at this picture here. This is the wider end picture. Every arrow is drawn. This big move was futures being lower that particular Friday, 2 Fridays ago. The big jobs data came out. And that was right here. We had a massive hammer reversal. Let me just zoom in. We had a massive hammer reversal that started around 8 in the morning. Market started 9:30. This was 9:30, right there. This is where, let me mark that spot. This was where the market started trading on Friday and went ballistic. Okay? This is where markets were pre-market. There is a very good chance we are going to test that level within the next 24 hours. So, do you take that as an opportunity to place yourself for a long trade, or do you take that opportunity to keep on doing the same stupid things that you've been doing for years and recently? I say take the opportunity to place yourself from a technical standpoint on a high probability, sharp reflex bounce that's going to occur Tuesday, possibly Wednesday too. Generally speaking, Fed meetings have not caused market sell-offs. And Mr. Jerome Powell, his name sounds like sort of British royalty, right? So I almost feel like saying Sir Powell. So he's a great guy. It's a great choice by President Trump to nominate him there. So bottom line is that that Jerome Powell is going to be a moderate voice in the face of all this anxiety. So point is that this level here, which is roughly 2733, I've talked about this, is a full-scale pattern completion. I've talked about that too. Forget all this volatility, pattern completion. I've generally seen these happen a lot over the years, that if you have a massive 400 or 500 point rally, over the following week to 10 days, one way or the other, the market gets there to retest that level. This also was a very important level. That's why you have to, when you look at the charts, you just simply read it the way it's written in English. Ascending triangle. This was your ascending triangle. This line here, okay, and basically this is what an ascending triangle looks like. There, it's your all of you took geometry and are familiar with structures. This is a triangle, different types of triangle. This is a ascending triangle. This is a descending triangle. Okay. So bottom line is an ascending triangle. Look it up. That's why you have to know these basic patterns of technical analysis. It's all there on my site as well as on YouTube. There are hundreds of videos, thousands of videos on basic chart patterns. I've explained that to all of you, especially my ACS students from day one. This ascending triangle, this was also the ascending triangle breakout. Ascending triangles have a high probability of an upside breakout. That's exactly what happened here, ladies and gentlemen. Okay, nothing new. So over the following 2 weeks or so, the market basically is going to come and retest. Futures are down 9.25 points. They're in the process. They're going to first find support right here because this is our trading range. As I told you, this is the first trading range. More it thumps at the lower end of the trading range. You know that very well. Law of nature. This floor is going to get weak and it's going to fall. So the bottom line is at this point it's 27.34. Futures are right now at 27.46. Listen carefully and act accordingly. Okay, so 27.47 and it completes this pattern here. And these are all tactical patterns. I'm not saying it can't go lower. Of course it can go lower, but I'm telling you the high probability move, which is where the money's made. So right at this level here, you're talking about 13 points. 13 times 6, which is the conversion ratio to the Dow Jones, is roughly 70. From here where we are right now, this is the live futures. Here is 78 points on the Dow. 9 points that we are down right now from Friday's close is 54 points. We are down roughly, Dow if it opens up right now, is going to be down about 54 points. So let's do the math. 4 and 8, 12, 6. So 132 points. So from Friday's close, 132 points is your max move down. Don't freak out. It's not the end of the world. If you're sitting on a first floor window, you might want to just jump out from the first floor and just like, say, hey, that's nice. And it's a nice jump. If you're sitting on a 10th floor, don't jump out the window. All right, please. So bottom line is that if you're sitting on a chair, just fall over just for the hell of it. Like, oh my God, just get scared, like act scared. So 132 points is where your max move down is before the market attempts there. Okay, there. Now, some of you who are new to clueless trade trading might think, well, this guy's like talking all this stuff like as if he knows. Well, I never know, but I've been dead right on this stuff. Ask anybody who's been here for more than 6 months with clueless trade trading. When I've explained this stuff and they happen and you're not there, you'll know that I knew. So I'm not saying I know exactly because nobody controls the market, but I'm showing you high probability situations where you can make some really decent money. And if you keep on trading the same stocks over and over again and expecting different results, then you're insane. All right? If a stock is weak, and I don't have time to get into that, I covered that quite a bit on the advanced coaching session that my paid students do. So if you do want to move on to the next step, then take the advanced coaching sessions. But bottom line is that you got to be flexible with the stocks you're getting in that. We're going to look at some of the best swing chart setups that are available right now for the taking that we have been doing well in. Okay? So bottom line is that this is it. So that's 132 points. That's what we just talked about, right? And you will see a strong reflex bounce. Now, when I say a strong reflex bounce, do I mean, oh, we're going to go to the moon, we're going to go take a new high? Absolutely not. It simply means it's going to come to the upper end of this channel, possibly have a sharp move up, and the most the market at this point can get up to is 27.63. Right there. And that's why there's a gap fill there. And that's why it's shaded in green. I'm sorry, it's 27.89. I don't know why it says 27.63 here. My apologies. So it's like more like 27.90. So if we bounce from 2734 to 2790, we are talking 56 points. 56 times 6 is a 336 point. This was a 400 point rally that 99% of traders missed out on. I know that for a fact. And here is a 336 point rally, which is a high probability trade, but it has to test this level. Now, if it starts happening from here, then it's kind of like, I'll be like, okay, but a lot of the times when technicians are looking at certain specific levels, guess what? It doesn't happen because too many they say a watch pot never boils. It's the same thing in trading because everybody's like maybe short towards that level, and the market doesn't give you that lovely reward of getting there and paying you on those puts. I've seen that happen a lot, but I'm showing you what would be a textbook scenario, and textbook scenarios don't always work. So that's the perfect, not perfect, but one of those like perfect moments where you want to be buying, like these. That there is literally a complete absence of retail traders of these double hammer reversal type of situations where they're deep oversold conditions, but retail traders, AWOL, MIA. I said that a couple of times last week. I said, no, I shouldn't say that. Maybe some of you get scared or something like, oh my God, he's just like always harping on things. I'm not harping. I'm not screaming at you guys. I'm just trying to help you guys. All right? See the daylight a little bit. Instead of always hiding under the bunkers and acting scared and missing out on continuously great swing trades as well as intraday trades. And some of you are doing it continuously, missing out. No excuses, please. All right? So anyway, that's your business, not mine. My business is try to help. So bottom line is that that's it. Nothing more to explain here. 132 points down here, 336 points here. Not bad. Now, otherwise, this level will hold. Futures right now were down 9.5. Guess what they did? Lo behold, don't believe in technical analysis? Be a believer right now. Amen. Hallelujah. Raise your hands. You've seen the light. Look at what it did. It came down here, it turned. Futures are down 7 right now. Okay?
Hey, Clue, could I ask you a question?
Make it quick.
Let's say it goes down to your textbook 2733.
Yeah.
When you buy those calls, do you buy in the money for that day, for that week? What's your best that you found out? Gives your best response.
Generally speaking, depends on how the daily. Remember, this is still a 1 hour chart. If the daily is really deeply oversold, a very good question, Golf, as we have seen many times, right? And the daily structure internals are really deep oversold. I'm not buying it for the day. I don't normally buy it for the day if it gets to those levels. I'll be buying the weekly ones. I'll be buying the weekly ones because that reversal bounce, when it comes, as you know very well from being here with Clear Estate Trading, happens within 24 to 48 hours. So I buy the weekly ones, not the same day ones. If I'm going to play the same day ones, that's only to trade when the market is basically trading in a range. But if it gets to those big inflection levels, and everyone listen to this, that's one heck of a damn good question, all right? You want to basically buy the weekly ones. And I'm not talking weeks and weeks out because we have no idea what's going to happen weeks and weeks out, even though I have my projections what might happen. So I will buy if this happens on Tuesday or even tomorrow, then I will buy a bunch of the Wednesday and possibly the Friday ones. Okay, and it also depends on the events. Wednesday is a big Fed meeting, right? So the markets, if they run up big time, let's say from Monday afternoon to Wednesday morning, what do you think? They're going to keep on running into the Fed meeting? No, they're going to take profits right ahead of the Fed meeting. So you want to be placing your position. And of course, as my alerts will go out, you will be buying them for Wednesday and for Friday. All right? That's your answer to your question. Okay? All right, let's move on. Now, let's look at the daily chart. Now, this is really what's getting played out by big mutual fund managers who are not looking at intraday movements and stuff like that. The daily chart is very constructive, guys. It's constructive. On the technicals, it's very constructive. Here's your stochastics. Now you got it. People like Al and stuff who are just starting to understand technical analysis. Al, just as a matter of point, as I told you before, I'll tell you again. There are some fantastic training videos which you need to look at, so you don't come up with those type of answers. I kind of busted his chop the other day when he says, "No, I don't really look at your charts." I'm like, "Great. What the heck are you doing at Clueless Trading? No wonder you're like losing money right, left, and center." Okay. So if you want to keep on punishing yourself and whipping yourself, then don't look at the charts. If you want to basically constructively make money in between rough times, but constructively make some decent money, you better look at my charts. You better make friends. And the best way you can make friends with charts is you can self-educate yourself. There are tons of resources on the internet. But on my YouTube channel, there's a whole, which I told you before, there's a new member introductory video, talks about basic chart patterns, candle dynamics, things which you can understand because I speak in simple English. I'm not giving you Oxford English here, okay? Unless you want me to, and then you guys will fly all over your heads. I'm giving you simple English in simple terms, explaining to you a lot of the stuff. But if you do not understand the basic structures of patterns and charts and stuff like that, then first of all, you will get very confused looking at my charts, even though they're very easy to look at. And you won't understand what the heck's going on. So take that as a very sharp piece of suggestion, because I don't advise. I only suggest. So let's move on. So at this point...
Thank you, Frank.
Yeah, not a problem. It's not the first time I'm telling you that. It's high time you started moving on that, Al. I'm dead serious. I want you to succeed. I want you to do well. And I want you to not do any more stupid things. Even though I do stupid things, everyone will do stupid things. But at least you'll do it less. And one of the biggest stupid things that retail investors do is sit on their butt and do nothing when big moves are happening on big stocks, regardless of markets. And we're going to go through those tonight to remind everyone on all the ones you guys missed and will miss if you do not make a move. Because life is about movement, not about lying in bed, scared. All right. So saying all that, let's look at the internals, the stochastics. The stochastics on the daily. Now, daily cuts out a lot of noise. You know that. Because as we zoom into something, obviously there's a lot more chop volatility. So the daily has volatility too. This was the big drop in February, first week in February, right? 1,300 points, 1,400 points, volatility trades, the vol trade breaking out, blowing up, billions of dollars just going poof, gone. These hedge funds gone. You want to know all about that for some of the newer members? Go listen to my webinar. It's right there. So that happened. Then we had massive candle reversal. I said the market was going to go. The market went. Then we had a minor bull flag, minor flag consolidation. Flag consolidation, simple English. Profit taking. And in between these days, there was a lot of volatility too. A candle like that is beautiful to look at only if you are positioned here, or if you position yourself early in the day or on the low of the day. A candle like that is worth serious confidence builder, guys. A candle like that makes you say, you know what? I can do this. Exactly. But you can get a candle like that and make yourself happy by taking some nice real profits off the table if you are not situated correctly. It's all about positioning, situating yourself at what tactical level. Fundamentals will tell you overall what's happening in the bigger world or individual stocks. Technicals will tell you when you should be buying and selling. And my type of technical structures that I draw are extremely precise as to where you should be buying and selling. And it doesn't mean that some of them go out of the detour a little bit here and there. That's caused by volatility. Nothing is perfect. But if you're close to getting 70% of the messaging that's coming out of my chart, you're way up there. And most of you are less than 10%, I'll be honest with you, in understanding the messaging that's coming out of my charts. But you can get there real fast. And part of that is building your confidence. And the only way your confidence will be built is if you focus on the charts, kids. All right? All right. So little consolidation, bang, bang. 2 days of bang, bang. Goes. Then comes 3 days of consolidation. And then the big move up. Then now we are getting 1, 2, 3. We had 4 days of a down day. And everyone's freaking out. Believe me, people are freaking out. And this is where we are. There's a gap here. That's why it's shaded red. It's a gap. See? Gap, gap. So we could come to the bottom of the gap. And that's around the 2740 level on the E-minis. On the S&P 500, sorry. S&P 500. Or 2740, 2738. That correlates with the 2734 that we just saw on the E-minis. So what's the big deal? It's not a big deal unless we fall apart below these lines. These lines that are drawn, they're not drawn for like some visual effect. They're drawn to basically make you money or save you money. These downtrend lines. These downtrend lines. Okay? So if we fall below this is an uptrend line. You understand? Guys, everyone understand what an uptrend, I know this is a dumb question of the day, but I have to ask it. Everyone understand what an uptrend line is and a downtrend line is?
Yes, Frank.
Anyone doesn't understand? I'm dead serious. You know, I'm not making fun of anybody. But and I promise I won't make fun of anybody if somebody says, no, I don't understand what an uptrend line is and a downtrend line is. Because this is serious stuff. So everyone understands what an uptrend line is and a downtrend line is, correct? Yes? Great. We're getting somewhere. So this is an uptrend line. Respect it. Right here. Drawn to perfection because two of the points, two critical inflection points were met. So it's a powerful line. Now, what happens? And that powerful line is coinciding with a bunch of trend lines right there. That level is 2733, around there. So what happens when you break a powerful uptrend line? Somebody just step up and tell me. What happens when you break a powerful uptrend line? No answer? Great. Okay. When you break a powerful uptrend line, you fall. Now that fall could be very quick, down to the 2700 level, or it can fall could be little, small, and then it bounces back immediately into this powerful uptrend channel. Does everyone understand powerful market runs? What does market runs mean, Mike? Market runs where? Down or up when you break a powerful uptrend line? Mike's answer is very confusing. The market runs. Yeah, the market's running all day, up and down. All right, I'm not going to bother with that. So bottom line is, yes, the market can either fall quickly, couple of 100 points on the Dow, real fast, and create a major support. That's why there are these two big blue arrows here. Major support at 2700, and then it creates a move up. Now that's basically what it's been doing. It's doing these upwardly trending W patterns. Now we're not down here yet, so I'm not going to call that. But we could be doing this from here. In other words, we are creating these W's, and we are creating, many of you know that, a rising wedge, which also is an ascending triangle. You can see that. Now, what did I say about ascending triangles? Let me see. Let me clean out this thing here. Here's the upper end of the ascending triangle at 2800 and change. And here's your right arm of your ascending triangle. Correct? So, if we for some reason bounce hard here, there is a good possibility we're going to bust a move up towards this major gap fill, which is around 2850. That's very powerful trading profits if you're positioned right. If you're sitting there watching the show, as some of you have been doing, then it's just another show. And for shows, you should normally refer yourself to Netflix or go to your local movie theater or turn on your TV, cable channel, whatever you like. For trading, you have to act. This is not a spectator sport. It's an engagement sport. Okay, so that's a possibility. Or if we break this powerful uptrend line, and this is the most critical part that's going to be played out over the next 48 to 72 hours, 24 to 72 hours, we could slip a little bit, find support at these. Remember, each candle with this wick here is not there for fun. This is where the markets turn, and you could have made some real decent money. Middle of the day, boom. And that's why my real-time tweets are so critical. So bottom line is, it could come down here, slip a little bit, scare the living daylights already of terrified retail investors, already 10 feet under the ground in bunkers. They're like trying to get another 5 feet underneath. All right? Scare the living daylights out of it, and then go boom, back into that channel. So how does one know that exactly that's going to happen? None of us know, but we can at least predict. And this is the predictive part. In the simplest form, if you look at what's been going on since here, first of all, it's an uptrending channel. So we're still within the uptrending channel. So that's a plus. Fine. This line has been drawn to show that if this downtrend channel, if it falls into this downtrend channel, then there's a possibility it's going to zigzag its way down here. That's why this line is drawn. But look at the internals. What's so hard to read about this? We're making higher lows, and the crossover up is intact on the stochastics. Somebody step up and say, no, I do not understand this, and I will guide them directly to the new member introductory videos and the training videos that I spend hours and hours on with other people and explaining to a lot of new members on my YouTube channel. Because if you don't understand these basic two lines and how they operate, do not be a trader. Simple as that. It's like when you put yourself behind the wheel of a car. If you don't know where the gas pedal is, acceleration, how to accelerate the car and how to brake and how to, I don't know if any of you know how to drive manual. I mean, I do. Okay. And like nowadays, it's on drive anyway, so it's fine. But if you're a manual driver, you don't know how those three things work, or in basic things like you don't know how the gas pedal works and the brakes work, and you're just steering, trust me, you're going to be wrapped around the tree or a lamppost real soon. So very important that you understand the basics of this. The stochastics are basically telling you overall it's just pointing higher. You even have a minor crossover here. This is on the daily chart. Now, if the stows break down below here, it's not the end of the world. It simply means this might come into play. And then the stows get reset down here. The ultimate time to buy the market, when nobody ever peeks their head out anywhere, whether it's in the chat room or anywhere else, whatever they're doing, is when the stows are deep, 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 deep oversold. And you can see that just by looking at it. You don't have to bother looking at the numbers. These are the RSI numbers, Relative Strength Index, 20 and 80. Okay? But anytime it goes below 20 and goes minus 10, goes to 10, then goes to 0.17, these are the perfect moments to buy the market. Because one way or the other, the market's going to bounce, and it's going to bounce like a you-know-what. I'm not going to, you know what they say in Brooklyn? Well, I can't repeat that on a public webinar, okay? So the bottom line is, that's always the perfect times to buy. So, okay, you missed the perfect time, and you've been missing perfect times a lot, many of you, okay? Fine. So let's look to see what you can do now. So now, it's still looking good because the markets don't get severely overbought. And this is generally when people start filtering back in the chat room, feeling like, ooh, markets are higher, great, like no, dude, please. That's when you want to sell. Because the machines know when you're starting to feel good. You got to buy when you feel like crap. And the technicals will show you at these type of levels, you're feeling like crap. You want to be a buyer. At these type of levels, CNBC's running like, oh, market's back on track. Looks like we're going to go to all the garbage. And it's not like I use CNBC for any other purpose. There's some great people. They're very smart people who come on. And my CNBC is always on, and Bloomberg is always on. It's not like but generally speaking, they're reflecting the mood of the average person. And the average person feels good when the markets are higher. Well, you have to position yourself prior to that. Because right when you think the markets are looking all good, like when we bounce here and complete this pattern at around the 2800 level, there is another big fat sell candle coming in. This happens all the time. But the problem with human traders are they never seem to learn. Anyway, it's really quite simple. Yet, people keep on doing the same old stupid mistakes over and over and over again. We all make mistakes. No question about it. But how many times will you make fatal mistakes? And fatal mistakes doesn't mean like, oh, you didn't sell because, this and that. The fatal mistakes are the ones when you miss out on these massive bounces. Because the market is still a bull market. And these fatal mistakes have cost you significant amounts of money for a simple reason. Because you didn't make it. What you don't make is what you lose. Telling you the facts, okay? So looking at this technical picture here, this is still looking good. And that's good. And even if the markets, as I showed you on the daily, even if the markets have a big drop, for example, it can happen. It can happen. We get a little too nutty on the China stuff, and they slap a 15% tariff on iPhones, and we sell tons of stuff to them, guys, all right? And trust me, we have a lot of favorable terms too. We're not like some angels out here sitting here saying that everyone's like hurting us. And the Europeans do the same thing too. This chart is going to land up here, and we're going to be down 2,000 points. So that's why I'm constantly monitoring all this stuff in all my screens, trying to help you guys as much as possible. But barring that type of event, we're going to see a bounce from here, or we're going to see a bounce from here. And if levels break, I'll be the first one to show it to you. And then we'll react. You got to go short. You got to buy some SPX puts, which in some cases have gone from $4 to $12 within a matter of an hour or 2 hours. Do the math. 4 to 12 is 200%. It's 3 times the money, 200% in profits. But no, if you don't want it, hey, what can I do? Maybe you're too rich to make money. Because this is what happens to a lot of traders. I was joking around in my last webinar when I was like, it really went off a little bit. I said, maybe some of you are just trust fund babies. You got money like flowing from the thing. I got debts to pay and I got bills to pay. Up the wazoo, like they say, And I work my butt out on this stuff. And so if you think that you don't want to make money on such powerful trades, that we're going to look at a bunch of these swing trades where you can basically sit on them. And then that's up to you. I'm not a Rockefeller. I'm not Trump. All right? I'm just another hardworking guy. So let's move on. So that's really the technicals right here. We're in a gap fill here, and at 2741, whatever the case may be. Now, on this note, let me just show you the S&P 500.
Hey Frank, let me show something I found that I think could help someone.
Go ahead.
On that same chart you have?
Yes.
You see those 3 last red down days?
Yes.
Okay, so when I look at the second candle, what I did is what I've been doing is when I see it come up and the sellers can't hold it, once it comes down below the previous candle, I short the hell out of it because then I know it's going to be an outside bar.
Yeah.
And that just gives me a funnel.
Right. So basically what Corey's talking about here is basically he's talking about an outside bar where the day, here's a bar, and that's called a bearish engulfing bar. So here, for example, it started to move higher the next day, but then once it crosses below the previous day's bar, you can see that on the charts too, then you go ahead, you short and you try to make some money on the downside. But remember, if you slept overnight and you basically held too much of the puts, let me tell you the actual facts on the ground. The market actually opened higher. Okay, so you better make sure that if you're doing those type of powerful short-term tactical trades, that you better be looking at the charts. And I wouldn't be not advising, suggesting to people to leave any type of large short positions overnight, because this market can rip the head out of people, because that's what they've been doing repeatedly. Look at this bar, as ugly as it can get. Yes, the market's opened down, but the ones who basically held on lost all their money. So be very careful when you're doing the shorting part in the market, given the fact, for reasons that I've explained, the market is still on an upward trend. But like he correctly pointed out, if you see a sharp reversal, you don't use the daily chart to trade that stuff. You use these type of charts very quickly, and you can trade back and forth. But you got to be really glued to the screens on that part, okay? Because this is a 1 hour chart, which, since we were talking, see, this is exactly what I said. It came down right to the bottom, and futures traders are trading these, obviously, right to the bottom, right where my arrow was. Can't make these things up. I didn't put this arrow after the fact. I did it before the fact, and look what the markets are doing right now. See what I'm talking about? In front of you, in real life, you're seeing Globex traders, millions of dollars, millions, not billions after hours. Yeah, maybe. Not that crazy after hours at this time of the night. Look what's going on. You see what I'm talking about? So there you go. That's it. Now let me just move on, or else, but good point, Corey. Thanks for bringing that up. So here is your daily chart of your S&P 500. The same chart that I showed you earlier on. Okay, but this is on Thinkorswim. Here's a gap fill. The lower end of the gap fill is 2740. This is a very important line. This is a very important line. The rising 20-day moving average. The 20-day moving average is the trading line. Okay, the trading moving average. Just the way the 5 is. The 5 is right now curling down a bit. And that's where we get rejected. The 5-day moving average. Now I show all this stuff so you don't have to like rack your brain and all that stuff. When I'm putting my tweets out, I put that 5, and I mentioned the 5 and 20-day a lot. So if the 20-day breaks, that means we're going to break below this downtrend line, and we have downside open to us. Okay, the 20-day moving average is at 2735. That's a critical number. Okay, 2735. If it breaks below, there is support at the orange line here, which is trending down. That's your 34-day moving average. And here is where the battle's being fought. That's why I pointed this out. You don't even have to do the calculation. I mean, you have to look at it yourself. 50-day SMA. That's where the battle is being fought right now. And it might slip below that. The 50-day SMA is at 2748, guys. So the minute it breaks 2748, you're going to see a flurry of machine-related selling, computer-related selling, algorithmic high-frequency traders selling down to the 20-day moving average, 2735. So bottom line is, that's 13 points, right? The 13 times 6, you're looking at about, you're looking at 78 points that you can drop within a matter of half an hour. But no worries about that. I'll do all the hard work of explaining all that stuff during the day. Let's look at this point. So this is what's going on right now. Now, if you want to look at a broader picture, after this monumental drop, the market's been doing this. So if we hold here, zigzag around here, we will do this. And that will be substantial. That will be substantial. If we do break this, then we got the levels we're looking at. 2700 is a very critical level. But there's a higher probability we will do this, given where we are right now. End of the month, bunch of stuff going on, and other factors related to the market, the emotional factors and everything has kept significant amounts of money on the sidelines. So there's a good chance that'll happen. Markets generally top and start to come down overall when most of the investors' monies are already piled into the market. So even though money's gone into the market, just ask yourself, has your money really gone into the market? No. So that's it. That's the easiest way to explain it. Now, let's look at a couple of, so that's it. So that's what's going on. And on the upper end, if we do get a monumental rally, because some trade negotiations have settlements have been reached by the major trading partners, China being the biggest one, then you are going to go up to 2,850, almost close to the highs, and they will sell the market there. But in order to make that type of monumental return, you have to be positioned ahead, not on that day. Then you're going to lose money. So let me just move on. Now let's talk about some swing trades here that you have a high probability. It's all mathematical. High probability of winning and winning big, even though it's already winning. I sound like Trump there. So bottom line is, that's another version of the S&P. That's your NASDAQ. That's your NASDAQ picture. So let's look at this, for example. All right. Alta. Alta is on a technical monster breakout. We've been trading Alta all the way from the low 190s, 200s, zigzagged around, but I've been walking people through Alta through and through. I don't trade Alta every day, but I picked inflection points where I think they go. They went. Alta was 191. Look at this chart here. Just absorb this, okay? I don't care if you wear mascara or not. All right? Maybe some of you, in hiding do wear mascara. I don't know. I'm just kidding. So the ladies, of course, too. Talking about you guys. So the point is that that this is a hardcore chart. Okay? The simplest way you look at this chart, without getting too technical, it is a massive W, which is going to resolve itself at $256. Period. That's it. It's going to go there. It's going to go to 250 and it's going to go to 256. You have massive sellers at those levels. Now, if you expect that to happen in 2 days, well, then you're living in another fantasy land that you've been living in for years now. But look at this chart here. This is powerful. I told people to buy it. Alta collapsed after hours. It was 207 or 206. It went to 191. On the following day, it closed at 222. Please do the math. That's a 31-point move on a multi-billion-dollar company. What more do you want from a chart? Even intraday, I said buy Alta, and they were up 30, 40, 50%. Doesn't matter if you missed it. They've missed the first stage, because this is the first stage of a real powerful rally. Okay? One with the other, it's going to creep up. And you got 6-7 points here, and possibly this. Now that is a big move from 1221. It's going to break through this major downtrend line right there, and it's going to go to 249. But it looks likely it's going to complete this pattern, just the way it's completed these patterns before. And this time the earnings validated their move. Now, if the stock is down $1 or $2 during the day, and it does this, I don't want you guys freaking out like monkey on hot tin roofs. That's why the MOHTR term, okay? Because that is a massive bullish candle. Billions of dollars went in there. So the point is, this is a replication of this candle. Every action has an equal and opposite reaction. Believe me, you're going to see that in stocks, in the market, in charts. You're going to become a believer, okay? Every action has an equal and opposite reaction. Who said that? Quick.
Newton.
There you go. Maybe, some people didn't know that. Sir Isaac Newton. Every action has an equal and opposite reaction. So do charts. Also pattern symmetry. Now, this is a very important level here. So if you're not in Alta, we'll see how the stock reacts at this level. It's possible that this is a cup and it creates a handle. That means the stock's going to pull back a few points. That would be your entry point. So wait for my alerts on that. Because if this is a cup and a handle, as it's breaking out, I would like it to pull back a bit. Otherwise, the power of this move, given the fact that the MACD has crossed over in a big way on the daily, guys. See that? This is big. The last time the MACD crossed over, the stock went from 191 till the MACD went into serious overbought level to 233. So 230 is a very possible target. So it probably zigzags around. So if you bought a little bit on Friday, then wait for a pullback to add a few more, and you sit on it. But the chart looks pretty damn good to get up there. That's how it looks on both the internals and the external. And this is a very powerful candle. You can see that. A few bucks back and forth will simply create a small red candle like this, as long as it's within the body of this. If it gives back all of the below 208, that means that was a fake move. So I doubt it. So I think it pulls back just a little bit, and then it basically attempts to move to the uptrend line, which is 224. That's pretty good. You get 2, 3, 4 points on this stock. It's pretty good. You get 20 points on the stock, you just won the lottery. All right. So let's look at the next one, Micron. Now we trade Micron on a sporadic basis, but the time that we went on a major swing trade on Micron is around the 46 to 48 level. Okay, this level. This chart is very powerful. It's a daily chart. It's not an hourly chart. Micron calls it damn cheap. Okay, and this is looking damn good. This is a big move. The channels have been drawn. Even after a very rough day for techs, right? On Friday, look what this did. Created a nice hammer reversal. So it doesn't mean it's going to $68. It simply means it has a high probability of retesting 63. You get $3 on Micron, you just basically did 200% on those cheap calls. And if the market does, if the NASDAQ, the Micron's moving on different fundamentals too. A lot of company, Micron's business is very strong. It's on a valuation basis, the cheapest valuation on all the chip stocks. So all kinds of stuff. Rumors, Intel's looking at them, all kinds of things. So who knows? But this is a good stock to trade. And it doesn't cost you much. And it's still within the channel, because if the world was a perfect place, which it's not, and there was no volatility, then the stock would basically rise up to the upper end of the channel, which would be 66. Could still happen. Buyers, all good. Showing you some basic stuff. This one is Twitter. Twitter's been on an uptrend all the way since the 20s. This is a great stock to trade. Now, you can be trading like, oh, I want like, a double on my Twitter. Twitter options are really cheap. They're generally 60 cents, $1. So you can be expecting like $10 out of them, unless you hold them for good enough. But Twitter's doing great. Look at the chat. It's on an uptrend channel. This is the interesting part. It got oversold. Like, Twitter can get oversold on a 30-cent drop, which is great. So it got oversold. Every time it gets oversold, it makes one of these hallelujah moves, right? So you want to be a buyer. It's still within the uptrend. If you want to play it swing, the stock's going to $39. Now, I'm showing you only one of the Twitter charts. The other Twitter charts is here, which I've shown quite a few times. No, not this. There. And let me show you the weekly, which is very exciting, actually. Very exciting. This is very exciting. I called Twitter all the way from down here. And then the earnings came, right? The earnings took it to a different elevated level. Now, these are known as Fibonacci retracements. And the first Fibonacci, the Fibonacci retracement at 38.2 was met just like clockwork right there last week. Okay? The next Fibonacci retracement, where I think the stock is going, is the 50% move. Now remember, this is from the highs of Twitter to the lows of Twitter from 2014 till 2017. All right? So I don't care, these are technicals. And remember, technicals precede fundamentals. If you're waiting around for news to buy a stock, you're too late most of the time. I put out a note the other day that I saw on briefing that Twitter's working on a Snapchat-like feature. Do you know how big that would be for Twitter? Because their business stuff is doing well. They're finally turned the corner. And then they're bringing out something that's going to be like a Snapchat type of thing. If that is real, stock's going to go up $5. Just like that. Boom. And hopefully most of you guys won't be spectators anymore. Twitter at one point or another is going to complete this pattern. This was where the stock completely broke. Now, can it get there immediately? No, obviously not. Can it get there by next earnings? Yes. Can. Institutions are constantly buying this stock every week. It's a weekly chart. So if institutions are buying this stock every single week, we're us to, we're like pikers. What are we to say? They're accumulating this stock. Now remember, this blue line here is a major inflection point, and that's at, it's even marked here, 38.83. I think that's going to be the first leg of the big move to 38.83. That's $3 from here, guys. So what are you sitting here watching for? Get involved. Or don't get involved. I don't know. Because, and Twitter calls are great. They move. Buy them at 50, 80 cents. They go up to $1.20. That's 50%. That's like an $8 call going to 12, which seems more exciting. Like, wow, $8 call went to 12 or 20, like Priceline. But what about an 80-cent call going to $1.50 or $2? That's equally exciting in numerical terms. What's the big deal? So this is a really, and the most important thing, and I'm just going to ask real simple, so that I know that you guys are understanding this chart, which is really not that difficult, is what happened here. This was a bull flag. I drew it, and then the bull flag broke out. The stock went from 32.66 to 35.97. Bang. So that's a bull flag breakout. So this downtrend line breaking out, this intermediate downtrend line, this one, not the one from 74, is big. It's pretty big. Now, can it back and fill a little bit? Absolutely. But the weekly chart is extremely powerful. And the stock is going to go to $38. High probability move. 51? Maybe. If somebody expressed interest in buying the company, the stock will go to 70. And there are a lot of rumors, and some of these do come true, that Twitter's on the sell block. All right, next one, Chipotle. Chipotle is one of the most powerful high probability stock move higher on a swing trade. You can buy these burritos, put it in your freezer, come look at it, and make some real money. This is a monthly chart. It goes beyond daily. This is a macro falling wedge. I'm not going to get into explaining what a macro falling wedge is. Go, look it on my video and stuff. So this is where the macro falling wedge is going to break out, which is approximately around $346. One way or the other, it's going to get and test this right here. Stock closed at 320. We've been buying and trading the stock since 260, 270. Okay? Because that was that big gap open on the news that the Taco Bell CEO joined joined Chipotle. That's huge. All right? So bottom line is, at this point, yes, the stock can be down $3 one day, $5 one day. I purposely don't want to get the MOHTR, monkey on a hot tin roof type of traders all excited and falling off the roof, okay? By saying, oh, stock's down $6, It's nothing. It's just simple back and fill. Look at the monthly chart. And then I also, of course, look at the shorter term charts. But this is a great looking chart. So even if it doesn't break out, you got 26 points under your belt. And these options are not expensive. They're $2, $3. Look at this. Even if it was a failure, the stock moved from 360. That was the last stage. Okay, the stock moved from 360 to 520. We traded that along the way. So this one, even if it fails here, let's say that the new CEO, the Taco Bell CEO, who's a genius in the industry in restructuring, fails to deliver on burritos, or a rat falls on your head when you're trying to get a burrito bowl, okay? Or another E. coli, I don't wish this on anyone, E. coli rumor starts. Because a lot of the times, short sellers pass these lies out there. Hedge funds do that a lot, by the way, okay? They'll propagate a lie in the chat rooms and stuff. Hey, there was a green E. coli climbing down my sleeve. First of all, you can't see E. coli, all this garbage, okay? Just to get the stock down. To do that. Short sellers lie. But aside from those type of events, let's say even if it gets happy, that's 26 points. Let's say you missed out on all this stuff. All right. So 26 points. And this is really great. The net volume, which is buying minus selling volume, the net volume is moving higher in months, which is great. That's not you and me buying. You and me don't buy Chipotle shares. You said, no, I want to buy the share. Great. How much can you afford? I don't know. Maybe you're a billionaire. You're a multimillionaire. But unless you own 1,000 shares of Chipotle, it doesn't make any sense. 1,000 shares of Chipotle will cost you $320,000. You want to put that in just one stock? Maybe you have a great portfolio. I don't have that kind of money to put in one stock. Okay? So you play the options. So the institutions, well, the reason I'm saying that, the institutions are buying stock. Because the institutions are buying stock, you want to piggyback them a bit. So 26 points here. And God forbid they actually change their stupid menu and they bring out something new and their sales are showing, traffic is showing higher, all that stuff. The opening, or whatever. No rats fell over the roof, fell from the roof. And all kinds of, bad things didn't happen. Mr. E. coli didn't show up. The stock is going to go literally to $500. Now, earnings are always big movers. So Chipotle's next earnings could be where it makes that bust a move past 400. Remember, when a stock like this, heavy stock like this, starts moving, institutions pile in like lemmings. And you're going to see it at 500. And you're going to say, hopefully now if you say, oh my God, stock was 280, All right, you're going to ask a question because I'm like almost hearing your brain, Corey. Make it quick.
Yeah. Hey, you're pretty smart. When I was,
I'm not pretty smart. I just look at things differently. Go ahead.
So when this chart that you put out on Chipotle, what I'm starting to do to myself that's helping me that you really got on me was the candles.
Yes.
So that last candle that you're at on that monthly, if it does get moving, I'll start moving to the left, look at those topping tails, and those are all the stops that are going to get fired off, which is going to cause that thing to accelerate.
Correct. Correct. So basically, as it crosses over each of the top of the candles, you're looking at things very minutely, which is great. Then you are going to, stops are going to get covered. But more importantly, look at the candle structure. You had a massive, this is monstrous. Okay, this is what the shorts are like. Whoa. We can't be dropping any more rats in the restaurants anymore. You know what I'm saying? This candle was huge. That is one of the biggest, longest, similar to Alta type of, but this is a hammer reversal. Does everyone see that? What a hammer reversal is? That is a hammer reversal. Now, can somebody look at this screen quickly? But obviously I can see it quicker, so I'll make time shorter. This hammer reversal was huge. Last time a hammer reversal like that happened was here, back in 2012. What happened to the stock after that? Do you think that can happen? I rest my case. Technicals don't lie. The last time we had a hammer reversal, very similar to this, and a basing pattern, very similar to this, was late 2012. What happened to Chipotle after that? Not asking you like you don't know. Look at the chart. Look at the chart. Okay? Hammer reversal. This one was much bigger. Rounding pattern. And I said this stock's basing. Rounding pattern. Following weeks and months. Following weeks and months. I'm not even saying it's going to $700. And trust me, it can get up there. But that's a different story. I'm not bothered with that. Upper Bollinger is 494, 500. So best case scenario, it goes to 500. Do you know what kind of money you can make if a stock from 320 goes to 500? Can anyone fathom what let's say somebody puts $1,000 where it can be here in options? Yes, I'm going to look at Bizon in a second. I saw that move on earnings. It's huge. So anyway, can somebody fathom? I'm sorry, Exita, my friend, was asking me to take a look at that. Yes, we certainly will. Somebody take a guess. If you bought calls out into July, August, further out, you buy them. Or you keep on rolling them out every month. Roughly $1,000 put here. And the stock eventually reaches 500, let's say in 4 or 5 months. Where is your $1,000 going to be? And don't give me some sort of BS answer just to impress yourself. What do you think it's going to be, Al?
At $1,000.
I didn't say $5,000. If you put $1,000 here, I'm taking a basic common denominator, and the stock goes to 500. What do you think your options are going to be?
It's gonna about 600%, 800%, if not.
So give me a dollar figure.
$1,000 would be $8,000 stock. It would be moving. You'd be making about $115,000.
So you basically say $1,000 will go to $16,000?
Yes, sir.
You're probably right. And it could be higher. It probably could be higher, but that's a pretty large number. So you think you want to make it?
Yeah, I will.
Good. So after this conversation stuff, you do what you need to do. But that's what the chart looks like. And that's not the only one. Alta's the other one. There's a whole bunch of them. These are serious money makers. So let's say somebody puts...
Yeah, BA and Caterpillar is the same thing. They had three black widows.
One second. There's one thing I want to bring out to you just for everyone's attention. You are obsessed with Boeing. I highly suggest that when you get that obsessed with one stock, that you remove yourself, because it will make you a widowmaker. I've seen this happen a lot. I'm not saying anything wrong about Boeing. I'm going to show you the Boeing chart. I already set it up. But every time I hear from you, you talk about Boeing. Boeing is not your friend. It's not your girlfriend. It's not your wife. It's not your boyfriend or your partner. Boeing is a stock. Boeing is not the strongest stock in the market. So stop obsessing about just one stock. Do you hear my point loud and clear? And that applies to everybody. Because I've seen so many retail traders, and I've seen a lot more than you can ever imagine, who keep on obsessing about one or two stocks, and they keep on missing out on all the other huge opportunities that's out there. So just as a friendly suggestion, I'm not saying not buy Boeing, but stop being obsessed with one stock, because Boeing has far more risk in this market than many other stocks that are not on that sector. Does everyone understand that?
Yes, sir.
Exactly. And believe me, I'm only here to help. And I'm not saying you're the only one. I've heard of, to people that fall in love with Apple. Like, great, I've traded Apple to Kingdom Come. But I'm not in love with it. Boeing is no longer going to be the $30 mover. I can assure you that. I can assure you that, my friend. Okay? So, start looking out a little bit more, because what you have done since you have joined the service, and I say it in a nice way, that you have missed out on tremendous opportunities in so many other trades because you've been obsessed with one or two stocks, and the primary one being Boeing. Am I lying? Just tell me that I'm wrong in what I just said. Tell me.
No, you're not wrong, Frank.
Okay. Acceptance is the first stage to being a successful trader. Denial. I know I'm not wrong. I know you've done some other quick trades here and there, but you're obsessed with this Boeing crap. What's with Boeing? You think Boeing's going to make you rich? No, it's not. What's going to make you rich are these type of charts. So let's move on to Boeing next, okay? And I'm serious. I'm dead serious about this, guys. I've seen so many guys just like, oh, this stock, one second. Come on, the market's full of great opportunities. And you just focus on one stock? You think that stock really cares about you? So let's look at Boeing.
Listen, everybody. Everything that Glue's saying, been there, done that. Listen to this man. He's got the experience.
I mean, Corey's known me for ages, okay? I don't talk to him. I've yelled at Corey. Corey's yelled at me. And I think I've yelled at him more, so I do apologize for that. And the fact is, you know what? He didn't just pipe in just to make you feel good, because I'm not in the business of feeling good. But I see these completely horrific traits in retail traders, and it's each to their own if they want to do whatever they want to do. But what I'm sharing is what I've seen, and believe me, it's not a good thing. So let's look at Boeing here, okay? Boeing is a very powerful stock. Remember one thing: Boeing is in the crosshairs of this tariff war. If we get into a major war with China, who buys Boeing? The Californians? No. Boeing's bought by Asians and Middle Easterners for the airline. China is the fastest expanding air fleet in the universe because they're the fastest growing population. Do you think Boeing is in a safe spot? I don't think so. Okay, I don't think so. You know, and if you think the Chinese are just going to lay over and accept all our demands on the trade stuff, well, you obviously have no idea about global economics. They're not. They're going to fight tooth and nail. And companies like Boeing, which you can trade them on a tactical basis, but companies like Boeing will be the first line of attack because their business is 95% overseas. Like we say in New York, capiche? You see The Godfather? You know, capiche? Understood? Better understand these realities, okay? But can you trade it for a couple of points here and there? I do. So let's look at this stock here. Boeing's real buy point is somewhere between 317 to 320. If the market falls that 132 points, you want to be buying aggressively here because that was a major inflection point for Boeing around the 317, 320 level. Boeing is very important to the Dow Jones Industrial Average for obvious reasons. It's the Dow Jones Industrial component, right? So on those 300-400 point moves that we said might happen, well, those are the times Boeing's going to go like this. Algos have Boeing on their trading grid. So they trade this stock. Like you notice how Boeing, like, the other day I said, like, buy it, and within like 15 minutes, the stock was up $4, right? It never used to happen like that because the machines and these hedge funds are trading Boeing like it's Netflix. And Boeing ain't no Netflix. So, and then within a matter of 20 minutes, it's down another 5. You know what I'm talking about. So this type of algorithmic activity in a company like Boeing, you have to follow the charts. Now, this is a daily chart. It's cutting out a lot of the internal noise, what is happening during the day. But realistically speaking, you are looking at something like this as a major inflection point. 322 could be a real number where it's what we call a tradable bottom. That means the stock, you got a good chance to get to that downtrend line. This is a formidable downtrend line around 341, but that's a lot of money. If the stock moves up 13 points here, that's a lot of money. We know that on Boeing calls. And then it's going to hit a roadblock, probably come down. If it really wants to go higher and the markets are cooperating, then you got a massive, massive move up to this massive. This is the breakdown point. There's going to be a lot of sellers who are trapped here and buyers who are trapped here. 350. So best case scenario for Boeing is 350, which is a lot. That means the stock moves 22 points. Does anyone roughly know 1 point move on Boeing is how many point move on the Dow Jones? I believe it's 16 points. Okay, so if the stock moves from here, zigzags its way to 350, you're talking about 22 points, right? So 22 points. Where did the stock close at? Boeing closed at 330. So 20 points. So 20 times 16, you're talking a 320 point move on the Dow Jones Industrial Average as Boeing approaches 320. Now, Boeing is very oversold. Great company. Don't take me the wrong way. But you gotta be looking at Boeing on an intraday basis in order to trade it. And now the only reason I said the tough words earlier on regarding not being obsessed, just don't get obsessed with one stock. That's all. It's Boeing's daily chart is this is Boeing's daily chart. It's the same chart but on Thinkorswim. So you got a major support level at around the 320. Boeing breaks 320, you can short it all the way to where the real rally started, which is approximately around $300. It's just going to fall like this, and the market's going to collapse 600 points. However, if the stock can hold here or in this vicinity, in this 10-point vicinity, expect a sharp bounce, which is what we call a dragon bullish pattern. See? W pattern. A W pattern. So I'll be looking at this, again, trade it, but don't fall in love with it. That was my whole message. There was a big buyer, looks like on a daily basis, this is the daily chart. There was a big buyer of Boeing. See? Short covering. That's a very good sign. That was this Friday. Internals are looking pretty good. Oversold. Very nice. McClellan oscillators are very nice. And here is something, this is a perfect example of a positive divergence. Now, I want you guys to just focus on this. Real simple. Real simple. Stock back in the first week of April, boom, boom. In February, when everything collapsed, the market was down 1,300 points. Stock based here, pretty much at the same level. Yes, guys, see that?
Yes.
Good. Al, you see that?
Yes.
Okay.
Yes.
Notice the internal, the McClellan oscillator, which measures. Well, look for the definitions after the section. Just Google McClellan oscillator. Okay, was down to minus 300. And Corey always knows I like scream like, "Oh my God, McClellan oscillator is down to minus 150. You gotta buy. You gotta buy." McClellan oscillator was minus 300. This is known as a positive divergence. During this sell-off, the McClellan oscillator went from an overbought reading to 0. Everyone see that?
Yes.
Okay. The stock went to the same level as the last sell-off. So in other words, the price retested those horrific lows of that crash in first week in February, went back to the 320 level, but the McClellan oscillator remained 353 points higher. Does everyone see that?
Yes.
Okay, so that is known as a positive divergence when price retests the low, but the internal indicators, in this case the McClellan oscillator, never even came down and stayed way above those lows. That is known as a positive divergence. This is huge. What this is telling us in simple English, that the real sellers of Boeing never materialized. Here they were real sellers. Here they were sellers, mostly major margin sellouts, institutional margin sellouts, okay? And the pressure underneath the surface was far less. That's what the McClellan oscillator measures, was far less than what had happened in the 1st of February. So to make Al happy and all of us happy, Boeing has a very good shot of going up 10 to 15 points if this plays out and if what the markets plays out. The positive divergences on a major stock that is part of the Dow Jones Industrial Average is significant. And I just saw it for the first time today. So thanks for bringing that up, Al. Okay? Because this is serious. McClellan oscillator was minus 300 and more. McClellan oscillator 53. And Boeing came down to retest those horrific levels. That's a technical buy. Yeah, go ahead.
Frank, you pointed it out to me last week, man. When you said keep on your eyes on the S&P index. So you kept on saying that, and during the week, when they said that the Boeing was down,
yes,
I kept on just listening to your memory. So Excellent. Can you look at Caterpillar too? That was another one.
Another one. Yeah, we'll take a look at Caterpillar, then we're going to look at Bison. Okay, Caterpillar's been faring a lot better. Okay, Caterpillar's chart, look at that. This is very powerful. Caterpillar, notice one thing. You know how Boeing is, notice this very quickly. Boeing, my friend, is notice with how oversold it is, right? See that? Full stochastics. These things are going to be like second nature to you. Give it a month, all right? So full stochastics, very simple. See how it's oversold? See? That's a good thing. That means that a lot of sellers came out of it, and this stayed higher. So that's a big plus. But just keep a mental check on that. Now let's look at Caterpillar. Caterpillar. So look at this. Look at this, how oversold it is. And oversold is telling you that, yes, buyers are going to come in, but it's still weak. Oversold is like taking a body blow. You fell, and you're like just starting to get up. You know what I'm saying? So if you really are healthy and you start getting up real fast, then this happens, and the stock moves. But look at Caterpillar now. Nowhere near there. Caterpillar has been strong throughout this whole recent sell-off. See that? See the difference? Boeing is down here, starting to get up. Caterpillar is actually a much more powerful chart. Now, part of this could be the fact that Caterpillar is not in the crosshairs of maybe a major tariff war, even though they sell overseas a lot. That's possibly a reason. Okay, and because Europeans don't buy Caterpillars, the really fast developing countries like China and India, they're buying Caterpillars. You know what I'm saying? So bottom line is Caterpillar is looking good, and Caterpillar's first line of a movement is, because then if you notice on really bad days, Caterpillar stays higher. So Caterpillar is right here, 50-day moving average. You got 3 points on the stock, and then we see what happens. If best case scenario, it gets up here, 165. But at least it can get up to this major resistance, which is this red line, the 50-day moving average, 159. So that's another stock on the industrial side that you can be playing. Now, the other one that I like is that options are really cheap and they move, is UTX. Now, UTX is actually, in my opinion, a very powerful swing trade. Okay, not a day trade necessarily. United Technologies. United Technology has a major activist investor in there. You know, I think Ackman's in there, and the two others who want to break up the company and sell their defense divisions and stuff separately as separate companies. That unlocks massive value, massive. So it's got an M&A potential that is not available within Boeing and Caterpillar. And the stock, basically, the options are real cheap. They're like 30, 40 cents. 127.96, I think, is a good floor. There was a lot of selling on it. Okay, it is oversold, but getting to be more oversold. It still has that same positive divergence for like before. So do keep an eye on UTX. Now, for my good friend Zeta, let me just look up Bison. These Chinese stocks are singing a different tune, guys. They're singing a different tune. NetEase, Alibaba, Baidu. I don't know if you guys saw the news over the weekend. Baidu's going to list their video IPO, video streaming IPO, similar to Netflix. In the US in the next coming months. This was news we knew before, but now they're spinning it off. That's big. That's big. And that's not streaming service they're going to be playing here. That's for China, but they're going to list it here. So this is a daily chart of how do you say it? Baozan? Baozan, okay? Retail fashion, is that correct? Baozan is like Alibaba, retail?
Yes.
Okay. This is serious stuff. This is a serious chart. This, gentlemen, is a major bull flag, ascending triangle. Now, here's the only drawback. The drawback is the stock has risen sharply. Sharply. It's up 50% from down here, which was back in late February, to it went beyond 50% here. Okay? So it might need a little rest. Now, the reason I think it does need a rest, aside from the fact that this is a very bullish pattern, this pattern is very bullish. What is not bullish is this. This is known as a spinning top, naked bar, okay, inverted hammer, which whatever you call it. So a spinning top, and look carefully because I'm going to highlight this. Let me draw this chart out. This is your range that the stock traded in before it busted a major move. This was a wide range of 40 to 27. That's wide for a $40 stock. And then came earnings, and it went off into the went off to new highs. Earnings were obviously very strong. The market accepted it, and a lot of fund managers who didn't know about Baozan or Biazan, whatever, decided, hey, I'm going to buy that stock. And the ones who did, sold. So this is where the thing is. The spinning top naked bar right here is a sign that major players exited the stock at that price. And that's why it's like that. Inverted hammer. That's a negative. And you can see that in the form of some hedge fund sold right on that bar 5.2 million shares. Right there. Bang! Payday. Because they were probably sitting on Baozan all the way from the 20s. They're like, man, this is great. So what needs to happen at this point that we're going to be watching is this ascending triangle, which is a bull flag. This is very bullish. See that? Boom. And then like that. Needs to break out with volume. Not this type of volume. This type of volume. This type of volume is the shorts getting murdered. Okay, that doesn't happen too often. So to take out the 51 level and negate this spinning top or inverted hammer. This is what an inverted hammer looks like. As I jokingly say, it's like a Chinese firecracker during Chinese New Year going straight up and then falling on your head. Okay, so you don't want that to happen because it hurts. So bottom line is that this is an inverted hammer. This inverted hammer, ladies and gentlemen, needs to be negated. So if the stock breaks out over 51, but you can trade it. You can trade it for 2 or 3 points. Just be careful because it's an ascending triangle, but it can also fall like this. There's nothing bad going to happen. Their earnings are going to. It's already been validated as a real company at this point. So you know it's moves to what, $2, like maybe $1 to $3. It's not like the end of the world. But if it takes out 51, that's what we're going to project. That means that spinning top is negated. It's decimated. It's no longer a negative signal. Then we have to look on the weekly. And when we look on the weekly, there is no spinning top, naked bar, inverted hammer. Is there, guys?
No.
No, not on the weekly. That means the stock's going higher. See, this is the beauty about technical analysis. I don't need to know anything about this company. But just by looking at the candles, I can predict with a high probability move where the stock is going. So at this point, I'm drawing in front of you guys, I am drawing a very wide channel. These channels shouldn't be red. They should be in a different color. Let's look at white. And what we are seeing here is that upper end of this channel is $52. So you got on a really bullish move on a weekly, like let's say, you buy the April calls or something, you can get yourself $4. That's pretty damn good because there is no sign of any sellers on the weekly side. On the daily, there is that spinning top, which needs to be taken out over 51 because that was an all-time high. But if we project out upper end of the channel, look at the number, $52 and change. So that's great. Now, if it breaks out over 52, well, then you're looking. Then you got to. Then you're looking at, obviously you have to draw higher, and this chart has to be adjusted higher. But at this point, you got roughly 4 points here on the upside. This is a doji, which simply means that it's it's a green doji, so that's good. That means it's indecision because of that big seller, hedge fund seller on the day it came out with earnings. But it also means that it wants to go higher. This is good. Weekly all buyers on volume. This is basic chart reading. Volume's all good. This is looking good. And a McClellan oscillator is not into crazy overbought levels yet, which is where it happens here. So yes. All right, so it's 10:45. What time did we start this session, man?
Hey, Frank, can I have one last quick question?
Yeah, go ahead.
What are your thoughts coming Monday that the shenanigans of the quad witching on Friday might had a huge play in the reason why the market was down last week?
You're totally, absolutely correct. I have nothing to know. Oh, not last week or that Friday. Look, there was a lot of pressure going on, which I think was the pressure was, and I explained this on the ACS session. I'll make this real quick here. A lot of the pressure that was going on, and we're going to look at the S&P 500, as we speak. Look, it went up and it came down. See how it's just tracking the lines? You can make these things up. I drew the lines. See? The world is following clueless state charts because it's right there. It goes, it sells off a bit. Now it's going to come down a little bit. It'll try to go up again. Okay, the couple of reasons here. Number one, Boeing dropping that hard during the week. You're talking about a major calamity for a significant amount of mutual funds as well as hedge funds who are long the stock with margin calls. Okay, margin calls are not a joke. So those institutional margin calls needed to be satisfied. That's why the first initial moves on Boeing, and Boeing has a very strong base around the 322. I posted a nice chart of that off my quad platform. Every time it went to 322 and change, it bounced. And then on Friday, it bounced off 326. So the point is, it looks like that margin selling needed to be satisfied, and those margin clerks, you're not dealing with hundreds of $1,000. You're talking multi-million-dollar margin calls. They did not want to leave it open going into this week. So every time the stock went up, it fell. But I'm looking at one of my other screens. It looks good that it's that if it takes out 335 at this point, if this stock takes out approximately 334.66, let's call it 335, it's going to make a sharp move to 340 real fast. And I'm just looking at my other chart. And I did post this one, by the way, on my Twitter feed. So reason number one, margin calls needed to be satisfied. Reason number two, the techs which were doing pretty okay were being sold by the same funds. Portions of them were being sold by the same funds to cover these margin calls. So the FANGs and the price lines and these big stocks, okay, the Amazons, were being used as ATM machines to come up with the cash to cover the margin calls on the Boeing. Boeing stabilized and was actually slightly up for the day, correct? Yes. Imagine on a day that the markets were down. So that was the second reason. The third reason was just the normal back and filling of the overall markets. That's quad reaching has a lot to do with it. But like I said, it's a tricky market. We've covered all the pointers on what's going on. I wish I could give you guys like, okay, Monday, and I've done this before. Monday we're looking at a nice 10 S&P handle type of rally, because it's still tricky. But I don't think we're going to have some sort of calamity as to like we saw in early February. But whichever the case, the most important thing that you guys know and all of the new members know is just whatever I'm putting down in the Twitter feed, just quickly take a look at it, even if you're not trading that day. And here's another thing I want to say. If it's really a crazy volatile day, don't trade that day. Seriously, because it's like I have a hard time managing stuff. So imagine if somebody's not glued to the screen, doing that. Put out a little bit of money on the swing trades like the Chipotle, the Altas, and a couple of these other names that I bring out. For example, I gave people PTI. It was a spec play, right? PTI. It was like $667. The stock goes to almost 8.5, and I said it was going to go there, and that was a nice return. So if somebody buys a couple of hundred shares, couple of thousand shares, I don't know, whatever somebody's doing, you can, it was easy money. And let me just show you. This is what we did with this PTI. That's why I said always keep your eyes open on different ideas that I put out. You don't have to go nuts, and there were cheap calls on that too, but I had some common. And I wish I had a lot more, because the stock basically went up like this. So I started buying it around here. Okay, it shot up to like 7 and change. Yeah, you can trade that. That's fine. Then it pulled back, but everything held pat. And then came Friday. Then came Thursday. Bang! It went to $9. So you got like a 30 to 40% return on a stock. Now, am I mired to this stock? No, I'm gone. Now, will I re-enter? Absolutely. The charts look good. But I don't know, 1 second. So you can always play these small things and, let me clear the whole drawing set out. No, I won't. Hold on. Remove drawing. Oh, it's remove drawing. Watch this. This is a real company. It's they came up with something major. Read up on it. And very high tech stuff. They're not a cancer company or anything like that. Hold on. Bear with me. Let me clean this out and I'll show you something. So I set the stock. Okay, good. So I drew the stock on it from a weekly chart, and I said it's going to, this was the downtrend line. Guess what it did? It hit the downtrend line and pulled back. It's still on an uptrend, by the way. So this stock, you can trade it for 1 or 2 points, and there's a big gap fill here between 10 and 11. So it's another spec play. So just keep your option. I don't mean options, but your opinions open and your options on trading different types of things, because a lot of the times, and it's the last thing I'll say, oh, the weekly looks amazing. It's $20 stock. Look at this candle. I actually didn't get a chance to see it after that spike because I didn't really have much, but it was still a great, little gift. But look at this. This is big. Look at the size of this candle. If this thing plays out, it's going to $16. A lot of these small biotechs have done that. If you sat on it, look at that. It's going to it's going to hit a wall at 10. But given the size of this candle and the volume, holy cow, 50 million shares. This is not a joke. It's a weekly chart. So here's another gem. What 50? It's 70 million shares. Look at this volume on this candle. Yeah, it was a minor pullback. Big deal. And the options are cheap. You on this stock, if you sit on it, you can get $14 to $16. That's a double on your money. And we don't have to worry about trade wars and tariffs because they don't give two hoots. That's the best thing about biotechs. The big biotechs get hit because of all the movement within the Dow and the Nasdaq. But these small biotechs, it's a New York Stock Exchange company too. They don't care. So these are nice buffers against anything. All right. On that note, I think it was a great session. Let me just upload this. Guys, the only thing I ask from you guys is real simple. If you like something, write a testimonial. That's our organic marketing. I've always said that on the for member feedback. Whatever you write, post it up there. No one censors it. Number 2, referrals are great. Number 3, let's get out there. Let's do it. And we all get scared. Trust me. It's no fun playing volatility. I hate volatility, if you ask me. All right? I hate these machines moving the markets up 60, 70 points in 2 minutes for no reason. But besides all that, stay focused. All right. We're all on this together. Have a great evening. God bless you all.
Thank you.
Thanks, Frank.